Hello everyone and welcome back to the channel. This is Fair Value Finder and today we're doing another head-to-head. And this time we have Pepsi and Coke. And we're going to see which stock is a better buy. These are two of the big players in the beverage industry. I know Pepsi does more than just beverages. They own Frito-Lay, Quaker, and they're in the snack business as well as the beverage business. So some of these numbers will look a little different. But when it comes to this industry, the top players are Pepsi, Bud Light, Coke, Keurig Dr. Pepper, and Monster. And these are two of the most known ones. Coca Cola is one of the most well known companies in the world, well known brand. And Pepsi is just a big competitor. And no, Pepsi does not work as a substitute for Coke. But we have all the numbers here. We're going to dig into them and see which one's better. So revenue per share, clearly Pepsi is winning. They're bringing in over $50 per share in revenue, and Coke is coming in sub 10. Just recently, they broke 10. So Pepsi is much better on this front, and they're growing a whole lot faster because they do have more routes of revenue growth and revenue in general. Cost of goods per share, Pepsi is winning again. And I think the main reason here is if we come over here, Coke has 3 to 4 times the share count that Pepsi does. And in fact, Coke is growing their share count. So this opened up my eyes here because this is concerningly high. The fact that it's raising is a big red flag. Debt to equity on both of these companies, these are definitely not companies that I would want to own. So I'm going to have to sell out of the small Coke position that I have. And actually, I ran the numbers on them, and I'm coming up with a fair value for Pepsi around $151.50, which means our margin of safety, we'd be looking to get in around 130 and getting out around 172. And today, well, the stock's sitting at 179. So I believe it's very overvalued and has a ways to go down before I'd consider buying in. Coke, on the other hand, today it's sitting at 60.64. It has a fair value about 52.5. Margin of safety 44.5, and I would be looking to reevaluate, potentially get out at 58. So both of these stocks, I believe, are overvalued. They have huge brand names, so you have to factor in a premium for that. And even if we say a 10% premium, we'd be coming up with a buy on Pepsi of 143, fair value of 166, and on Coke, we'd be looking at a fair value of 157 to 158, which means we'd be looking to get in around $49. So to start off the bat, I would not be buying either of these two. Just with the information that I'm looking at here and their current valuations, not worth it. But as we continue to run through, we'll see who's better. So Coke is winning on COGS. Of course, they have much lower COGS with much lower revenue, and their COGS is growing slower. So sometimes you get an inverse relationship like this. Sometimes you don't. It just depends on how well the company is running. Gross profits, of course, Pepsi is killing it on gross profit. They're getting 5 times what Coca Cola is down to the bottom line. When they were getting more than 5 times up at the top line. And so looking at that, I'm thinking Coke has better gross profit margins, and they do. They're coming in with about 5% higher gross profit margins. So Pepsi is winning on actual dollars and the growth of those dollars because they're growing very fast. They've got double-digit growth on the top line at least. But Coke has a better gross margin. They both have been experiencing some falling of their margins, but apparently Pepsi's not falling as fast. Expenses per share, yeah, Coke is blowing it out of the water here just because it is a significantly smaller company and they're only focused on one specific industry. So we have Coke coming in at $6.36 in 2019, all the way up to $7.61, and at the same time that Pepsi's gone from 40.88 to 57.73. So Coke wins on trend, much lower expenses. Expenses as a portion of revenue, Coke is winning too. So we see that Pepsi has incredibly high, significantly higher expenses as a proportion of their revenue. So they make more, but they also spend a lot more. 2023. So this year, we'd be looking at about 86% of the money that they bring in top line is going towards general expenses and cost of goods. And for Coke, that's only 73%, which is likely going to give us a similar situation in the net margins where we have Coke winning out, coming in at the low 20s, low to mid 20s, at the same time that Pepsi's hovering right around 10%. So Coke is winning on net margins. For actual net dollars, Pepsi's winning. Pepsi's growing faster. So the story here to me, looking through all of this, is Pepsi has a more expensive business and they're able to drive sales a whole lot better, growing that top line a lot. But Coke is a much smaller, more consistent business. They're able to hold their margins rather steady. At least their net margins down here are pretty flat, especially when compared to their gross margins. So they are able to adjust operations to make sure that they're bringing value to the bottom line. Earnings per share. Pepsi has been incredible at growing theirs. Coke's just been pretty consistent, just slow, consistent growth. So Pepsi's winning and growing faster. And then the actual earnings yield. So like what portion, what's the multiple between the earnings and the share price? We have Pepsi winning, and they're pretty consistent with it, right around mid 3s to 4%. And Coke has been on a run with it, going from 1.4 to 4%, which means you're paying over 20 times earnings for both these stocks right now. And when we come out to the final numbers, we got a tie on financials. So if you want an operation that's growing quickly, Pepsi would be it for you. So it's more of a growth stock. And if you want consistency and honestly a bit better of an operation, Coke's the one for you. So I feel like Coke's probably more for a dividend investor, and Pepsi is more for a growth investor, just based off the financials. But we can look at everything else. Share count, Pepsi is much lower. Coke is rather high. Pepsi is slowly shrinking theirs, and Coke has been growing theirs. And I found that surprising. So I went and I looked at the numbers, and I mean, it's correct. They have been growing their share count year over year, not by massive amounts, but by what they should have been buying them back. They went from 4.3. We have the share counts here. So in 2019, they had 4.28, and then it was 4.29, and then it was 4.32, and then it was 4.33. So we'd be expecting at least a 4.34 here. And we don't like when companies are raising their share counts because they're diluting all of this information. This is on a per share basis, so we can get an apples to apples comparison. But to be fair, Coke is trading around $50-$60 while Pepsi is trading almost to 200. So the market caps of these stocks is probably pretty similar, considering that Pepsi is trading for 4 times as much, but has about a quarter of the shares. Shareholders' equity, Pepsi is winning 12. They seem to have a better balance sheet, but we'll get down to that. Coke is growing theirs faster, though. Free cash flow, $4 in free cash flow for Pepsi, 2 for Coke. Coke's growing theirs faster. Free cash flow yield, 6 compared to 22. And they're both shrinking, but Coke is shrinking by less than 1%, while Pepsi is shrinking by over 5%, at 7%. So for For this portion, we're definitely looking at Pepsi being the winner, but Coke is being the better growth option here on this front. Assets 67 compared to 21. Of course, Pepsi is winning and they are growing theirs faster. And then we have liabilities 54 to 15. Coke wins with lower liabilities and they're growing theirs pretty slow, less than 1%. At the same time, Pepsi is growing theirs at 5.6. Book value 13 compared to 6. So there's just more value in your shares at Pepsi. It is shrinking though, 0.2, while Pepsi is growing theirs, or Coke is growing theirs by points or 7%. Debt to equity. It's crazy how much debt these companies have because I hadn't dug too deeply into them. 4.37 for Pepsi, 2.78 for Coke. And Coke is actually driving theirs down pretty well. But again, we don't like anything over 1 on debt to equity. And the fact that we're seeing 4 and almost 3 is quite a bit. Cash per share, $3.70 for Pepsi compared to the $2.27 for Coke. And Coke has been building cash while Pepsi's been spending it. Dividend, you get $4.53 for Pepsi and $1.76 for Coke. Pepsi has been growing theirs faster, 6.1%, while Coke's growing theirs at 3.2. They did slow it down for the pandemic. They have been picking it up more recently, so we'll see how that continues. It looks like in recent years it's more in line. Dividend yield 2.6 compared to 2.9, so Coke is the better dividend play here. ROE 52 compared to 39.6. And if you've watched the other videos on this channel, you'll know we're looking for a 20% on ROE, but this can be skewed by debt. The fact that we're seeing 4 on the debt to equity ratio means that it's very heavy in debt on the Pepsi side. And this valuation is heavily skewed positive because there's a lot of debt that's driving down the shareholders' equity. And on the PE front, they're trading pretty well in line, right around 27, which is super high for these stocks. I mean, we'd want to see it down closer to 20 at least to get in. But we want to see this hold pretty steady because that'd show consistency in the market and it'd show there's not huge swings in their earnings or their price. And Pepsi is a bit better at that. It's down 1%, while Coke's is up 4%. So, again, we're pretty mixed on this. For the balance sheet, it looks like Pepsi is a little bit better, but that debt is just insane. So I almost just want to give it to Coke. For the growth on the balance sheet, Coke is way better. They're better on almost all fronts aside from asset growth. And then for dividend, just general market value of the stock, clearly Pepsi's more of a growth stock and Coke is more of a dividend stock. And that's what we're looking at here. I wouldn't say that Pepsi is not a dividend stock. I mean, it's 2.6% compared to 2.9. So there's not a huge difference. So it's kind of a mixture of growth and dividend, which is interesting. But again, I think that it's just so hard. Of the two, Pepsi is probably a better buy. The fact that they're not issuing shares, they've got a better current balance sheet, more growth on the financials, so they have the ability to shape stuff up. But it's tough. And I wouldn't even be looking to buy the stock until it's down to at least 160. It's just incredibly high right now. 179. So I'd want $20-$30 shaved off that share price before I'm even considering it. And then even when I do consider it, it's going to be a no for me with this high debt to equity and this skewed ROE. But for some people, I mean, if you're a fan of the company, it's a product they create a product that you use. It's not bad to have exposure to stuff. Not a massive position, but exposure. So I want to thank you guys for watching. Please like if you enjoyed the video. Comment what other head-to-heads should we do? Should we take some of the other beverage industry, or should we start looking somewhere else? Subscribe so you can stay up to date with everything and see what the next head-to-head is, and follow along with the channel's portfolios.